fundsupermart.com.
Hi Elina, how has Asia small caps performed against their large caps counterpart?
Well, if you look at the long run, actually Asian small caps have been outperforming the large cap counterparts. So I refer to a chart that we saw recently, and that was since 2001. So Asian small cap has been outperformed large cap, with the exception of the crisis periods. So I'm particularly talking about the global financial crisis in 2009 and the Euro financial crisis in 2011. At that time, Asian small caps actually tanked in a big way, but then they also rebounded nicely afterwards. So I always give my investors the advice that if you think there's an imminent crisis coming, you try not to touch small cap, you just get into it at the center of the crisis. But by looking at the Asian economies, we have a more positive outlook going forward. So we don't really anticipate an imminent crisis. So chances are Asian small caps are likely to continue to outperform the large cap index.
How attractive is Asia's small cap space at the moment?
Well, a lot of questions are being asked about this because if you look at the Asian small caps, they have gone through a decent rally since 2012. So if you look at the index itself, it may not look very attractive. But if you look at individual market valuation, you find that currently there are 4 markets that are still trading at a valuation that is below the historical average, namely Hong Kong, China, Indonesia, and India. So on the price to book basis, they are still trading at below historical average. So we do see opportunities from time to time for individual markets. But one thing I want to highlight here is because we don't just focus on the index, because there are a lot more opportunities for individual small cap within the universe, because what happened is only 20% of the small cap universe are under active sell side coverage, meaning 80% of them are not covered by a lot of the sell side. So that creates a lot of inefficiencies and therefore opportunities for people to pick the under-researched or for those stocks that are overlooked by the market. And this is exactly what we are doing in HSBC. So just to give you an example, in 2013, the Asia index in general was having like a flattish return. The small cap index was up 7%, but our fund returned 24%. So this is exactly how we look into stocks that are under research and overlooked and are being overlooked by the market. So despite the fact that the index seems to have gone through a good rally, there are still a lot of good value stocks out there that the market hasn't really discovered. Yeah.
Between Asia small caps and US small caps, which is expected to perform better in the next 1 or 2 years?
Well, I am not a US small cap specialist, so I can't comment too much on that. But just by looking at the valuation, Asian small caps are obviously still trading at much cheaper valuation as compared to the US small caps. And also, I think US small cap is pretty much within a developed economy, while the Asian small caps are still benefiting from a lot of interesting stories within an emerging market economy. So these are the basic differences.
Are there any areas investors tend to overlook when it comes to choosing between large and small caps to invest in?
Well, I think there is in general a misconception that people think that you would only touch small cap during a bull market, and you don't touch small cap if it is not a bull market, as simple as that. But as an answer to your question, to your first question, I already told you small cap index actually in general outperform the large cap index in the long run, except in crisis period. So that sort of addressed the misconception that people have regarding small caps. And another thing is people always think small cap is a beta play. So if you want high beta stocks, you go for small caps. Otherwise, you don't. But actually, this is, again, not the situation. We look at a lot of the individual countries. We find that very often, a lot of the small cap names actually are trading at lower beta than the large cap counterparts. for a lot of countries. So that may not necessarily be the case for the small cap as far as beta is concerned. Thirdly, I think investors should also pay attention to the diversity of the small caps that offer to investors. If you just look at the benchmark makeup between small cap and large cap, for the large cap index, over 30% of the benchmark is made up of financials, i.e. real estate, banks, insurance, while the weighting is much lower for small caps. And a lot of small cap weightings is actually more concentrated on more diversified sectors, consumer discretionary, healthcare sectors. So if you're just looking at the benchmark, you already see a lot more opportunities out there, within the small cap. And that's why even during 2013, when the market was still lackluster, when the economy was still lackluster, our funds still returned 24% because we identified a lot of interesting opportunities within sectors that enjoy small pocket of opportunities.
Is it challenging to look for companies to invest in? What are the factors in your selection criteria?
It is challenging simply because, as I shared to you before, the market is very inefficient. Only 20% of them are under active sell-side coverage. So if you don't have a lot of full-time dedicated investment professionals, if you are not backed up by more than 60 analysts around the region, you are not able to capture the opportunities created from this inefficiency. But for us, we are able to do that because we have huge research capabilities, backing us up. And we also have 2 dedicated full-time fund managers to manage this fund. And that's why we are able to capture the opportunities by investing in stocks that are overlooked by the market. Yeah. So this is a challenge, but at the same time, this is the opportunity that is given to us. So regarding the factors that we use in our selection criteria, within HSBC, we have an investment philosophy whereby we believe that stocks with good profitability are likely to see their valuation going up eventually. So by focusing on this, we actually can put most of our focus into identifying stocks with good profitability, but a decent valuation. And that is one key factor that we use in our stock selection. Regarding small caps, we also focus a lot more on companies with a clear business model, easily understandable business model, with clear audit trail. We also look for companies with positive operating cash flow, better still if they can pay out dividends. We also prefer companies with long management track record. They could be newly IPO'd companies, but they need to have a management that have been in the industry for a long time. Yeah.
Thank you.
Thank you.